points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in on February 16th, 2022, and Airbnb stock is going to the moon. We're going to talk about that, and I have to go over the earnings plays, but we still need to talk about tomorrow. The market is going to go crazy. We have the minutes, but what we saw today, it really highlighted how important it was going to be. There was a lot of action, but in reality and in comparison to yesterday, it was peanuts. It was absolutely nothing. So there's a bunch of stuff that we need to talk about, so I need to jump here to the first pretty picture before we get in the minutes and to understand what you saw today. A big question that came out. They're like, wait a minute, why didn't the market respond to the producer price inflation, the PPI? That came in higher than expected by a very large margin, but what this chart is showing you, this is the reason why people did not freak out as much. It may come up, and you did watch a lot of bond action today. The real big action today, and the thing that actually took headlines besides this, it was the Russia-Ukraine situation. Russia pulled back some troops. A lot of the safe havens went down, and it created this weird imbalance, but at the end of the day, that was the big headlines, but a lot of people didn't freak out here to inflation, because if you notice something about this chart, it is not going straight up. So even though inflation is still high, I mean, producer inflation was in the high 9%, 9.7. It's absolutely insane, but at the end of the day, it was still lower than last month, so it creates one of these scenarios where we might be able to chill until it starts to ascend again. So this was really big. We didn't talk about it much. I mean, it kind of was there, and then there was a lot of stuff, but I do want to start with this to give you some insight, and really didn't move so much. And when we saw the market kind of do its thing there, it really points to the fact that, well, the market really cares about what the Fed is going to do. Everything else is kind of extracurricular. So we got a lot to cover. I'm going to go over all of that. We're going to go over the Airbnb plays and even the post-earnings continuations. There is a couple of them that I actually do like, so we're going to cover that, the plays that we made, and then everything else for the rest of the week. So drop your thumbs up on the video if you find it helpful, and big shout out to those staying in the game and showing love. I appreciate all of you. You guys went crazy on the like button on stream today. That's what I'm talking about. But as far as what happened today and what we got, there was a lot of tensions. Again, everything going on with Ukraine, that has been very important. But the main thing I got to highlight, and we showed this on stream, it was a lot calmer than yesterday. So I said it was peanuts, but you could really see it. If you watched it on the day, literally any of these moves felt so big while they were happening. But then when you go and zoom out, remember, we were dropping and swinging about 4 or 5 points instead of 1 point at a time. So even though there was a lot of headlines and it was good news, you didn't really get intraday moves. We did bounce up, but sadly, we did not get to that 447 level. That has been a key range we've been watching over the last couple of weeks. So that was bad. And to even understand the moves, like I said, a big part of today was an unwind with the safe haven. So literally, oil stocks went down, even the bonds went down, even gold, and that's what we were talking about. So this relates to everything with the tensions, but now the fact that the market's still kind of at a low level below some of these key levels, it's highlighting how important the Fed and all of that information tomorrow will be. So even if today was calm or even if it was crazy, the real thing to notice with all of it is that nothing has really changed all week. Bonds are at their lower levels. Fed futures, they have not really budged even in the last 2 or 3 days. They've pretty much stayed at the range since they've gapped down on Monday or gapped up and people were getting worried. So nothing has really changed, and that's why now we got to watch the minutes, and tomorrow that is really going to be a catalyst. It comes out at 11 a.m. Pacific time, and since I already showed you the pretty picture, let's get to a more interactive one, and for you to really understand what we're getting tomorrow and even understand last Fed minutes, that is when all of the volatility started. But what you could see here, out of the last 2 years since January 2020, here are all of the results and how it affected the S&P 500. The average response is a 0.25 point gain, but this orange line right here, that was was the last Fed minutes that we got that really sparked everything. So essentially, we're not supposed to move as much. This big purple one where we moved almost 4%, that was from the April minutes in 2020, and that was literally 1 month after the emergency rate cuts. But think about all of this in perspective. It will be a very interesting move to see how it stacks up against the last minutes. And again, now with all the tensions and what we're expecting, it is going to be an interesting one. So it could go any way from here, but you could even see, the last couple ones, I mean, even through 2021 or the last like 6 or so, it's literally been half up by a lot or half kind of just chilling out around 1% and then bouncing up towards the end of the day. So we will see what happens. It will be exciting. And remember, it comes out towards the end of the day. So there will be an initial move and then there's going to be the follow-up pretty much for the next morning. So as far as what you need to know for the minutes, again, it's really only going to be text. So that's the first thing. And this is how a lot of people are kind of getting ready for tomorrow. So the fact that there's already a lot of, negative views towards it, it may be good, but just understand there's not a real meeting. You are not going to hear from Powell. We will hear in the next coming days from other Fed speakers, but the Fed minutes is just plain language, and we do run the risk of interpreting it hawkish. So essentially, right when it comes out, the algorithms and a lot of people are going to read it since there's no explanation and we already got the following talks. Everybody is just left to interpret the text. So there's a more of a chance that it will be interpreted as hawkish, but now the keys are exactly the same. What we're going to be looking for, anything referencing balance sheet runoff, and this is now in order of importance, or at least what I think is important. It starts with balance sheet runoff. Any new updates on that could either clap the market or calm it down. Then the size of the hikes, whether we do half a basis point or if they start talking about just a really high expectation of where they see rates are at, that's going to be bad. And then finally, the speed of the hikes. But since this is already kind of priced in and everybody is just ready for them to move on March already, this one should be the least important. So these are the keys to be looking out for, and these are what everybody has been monitoring. And then as an added bonus, if we hear any words or get any words along the lines of gradual and predictable in reference to anything, and they kind of highlight that, or even if it is ambiguous, they're able to kind of just pound this home a little bit more than they have, that could be taken as bullish. So we will see what happens. Again, the real main point of all of this, like we've been discussing, you want to watch the Fed futures and bonds and see, okay, after the Fed minutes comes out and after people start digesting it, does it lead to a change in anything that the market could price? And that's pretty much going to be the size of the hikes and when they could happen. And that's where the Fed futures come into play. So super straightforward. Hopefully this helps. We will be live there in the morning, youtube.com/the stock market, and I hope you're ready. But coming into the company news and events, the first one, I'm just going to give it to you very simply how all of the Russia news played out today. Essentially this morning, there were reports that Russia was pulling back troops. Everybody took that as positive. All of the safe havens sold off. Then middle of the day, it looked like we got a lot of volatility, but it wasn't that much at all. The market held that range, but it was during Biden. He had a speech on it, and he has warned Russia against any sort of attack, invasion, or anything that would escalate it. And then a little bit before that, but it got confirmed a little bit later, there was a bunch of cyber attacks or DDoSing at some of the big Ukraine banks. And then I think U.S. intelligence said that may be the plans of the Russians to start a bank run over there so people lose faith. So a lot of stuff going on. That was the back and forth yesterday. Definitely had a way bigger effect. So we'll watch again. February 16th, supposed to be a date. We'll see what comes out of it, but that's kind of the quick version of everything that happened. We will see how it plays out tomorrow, but chances are the minutes are going to be the big driver, so watch out for that. And then coming into the earnings, Airbnb, they beat on the top and bottom line, and they guided higher than a lot of people were expecting. It was an overall good beat, especially for what should have been a seasonally weak quarter, so that was great. The stock went up. I think they're up about like 10% now. Roblox, sadly, they dropped 13%. and it was after missing estimates and just stoking these post-pandemic performance fears. Essentially, they missed and people guided up, but it's some of the best numbers that they've ever had. But at the same time now, the problem is it's bringing up these questions of, are they going to now start underperforming like any company that did good during the pandemic? So we're really going to have to watch how that plays out. It's definitely going to be an interesting one. And then Upstart, they climbed 30% after beating and then guiding up, as well as announcing a buyback. So a lot of big moves here. We're going to watch the follow-up, and we will see how the Fed plays into all of it tomorrow. But that was the quick rundown. And then U.S. intelligence, this one was surprising. They accused Zero Hedge. It's like a stock or news site. They said they're a conservative news site. I did not know that, but they accused them of spreading Russian propaganda. The company responded and said that they try to highlight an array of different stuff, but that they never do. So that one was interesting. And then U.S. regulators, they told Boeing that they still have the authority to inspect the 787 Dreamliner before they deliver it to anybody. So that was interesting. Stock went down. A lot of people are saying it's a setback, but hopefully it's safer. We'll see. But there was that. And then JP Morgan, they set up an office in Decentraland, and it has a photo of JP Morgan's CEO, Jamie Dimon, when you walk in, and a virtual tiger walking around. So that was cool. And then Elon Musk made a $5.7 billion mystery donation. Some people are suspecting who it went to. It could have been for the food and all of that, but he donated his Tesla shares, and this did occur around the time where he said he was going to sell it and did all of that selling. So very, very interesting, but super straightforward. Like we said, we got our catalyst tomorrow. We got a lot of plays, and I'm sure we're going to see a lot of volatility until the next Fed meeting, and this just might be another wave, so I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 stocks that I'm looking at coming into tomorrow, and I know the first one is obvious, baby. Airbnb. So we had a couple of plays. I even did it on Roblox. We had those pre-earnings run-ups. I trimmed a couple of them, but essentially I am looking for the continuation on this. I will be down to add more, but now my problem is a lot of the continuations, even yesterday with ANET, we didn't really see one, and even I think ever since Disney, a lot of the continuations have been choppy with the volatility. So tomorrow isn't going to help, but that's why we're going to see the numbers were better than ever. I am still holding all of those plays. We got those leaps, but tomorrow I will be eyeing, again, same exact contracts that we've been playing. There was a lot of graveyards. They did come back up a little bit, and that's all you got to do now. Watch the 220 to 240 contracts around April. That was a sweet spot last time. I'm definitely going to eye them and see what sort of pricing we have. But remember, last time Airbnb did a lot of the move after earnings. It was following the actual earnings. So one thing to note, they opened up around like 185, and then I think at one point throughout the day, they closed up at the $200 level. They even went up higher the next day, and then they came down, and then it started this jumpiness. So pretty much you have watched Airbnb. This thing moves in waves. So what I'm saying to expect tomorrow is there's probably going to be a streak of upside. There'll be a little bit of downside, and then it'll do its thing. And again, you remember all of the double and triple dips. So I like it, and even like I titled the video, I think this is going to the moon. Remember, we have this in every single long-term portfolio. I will not be buying more for the long term until it comes down again, but I do like it, and I think this is good. If you haven't checked out the earnings, essentially, they did good for their fourth quarter, and they guided up about 20% higher. All of it is looking good, especially since the guidance was supposed to be good. So we're going to talk about this tomorrow, but really, there will be a lot of plays on this, so I'm definitely going to be eyeing this one. That is the first play, and then coming into the second now, Roblo on the other side of the coin, they did bad, and the earnings weren't that bad. I will say, yes, you could call me biased, but what I mean by it is that the expectations were already set high. We went over that. It's not as if they are showing a loss or they're losing some of the growth, but they didn't hit those expectations, and now some people are worried because the fears, that is the bad part about this. So if people start worrying and placing Roblox in that category, category of, well, we didn't like their earnings and now they may not have post-pandemic growth. Remember, that is what drove them up to 120, 140 last time. So that's why a lot of people like it. So that's what I'm going to be watching for tomorrow. I might add some more. Again, it is getting to a very attractive level even for the long term, but I want to see what happens with like $50, $55 tomorrow. Plays will be crazy. We did make that one play that we had in April free. I sold out half of it, but we still got the old leaps, the shares, everything else. That one should show a little bit of damage tomorrow. So we're going to see, but I'm definitely going to be eyeing it out. There's going to be a lot of volatility, a lot of blood there. It's already down 13%. But like I'm saying, I think it could be decent, but we really want to see how analysts treat this as well as the overall market and sentiment. But that is going to be the second play. And then finally, CHK. So oil plays, again, everything with Ukraine. I mean, oil has already been going up, but just compounding all of it, oil plays are definitely going to be one to watch. They are just moving in a way they really haven't moved in a long time. So timing is going to be difficult. One day it's down, then there's good news, bad news, tensions, but then it's still down. The premiums and the companies all are all over the place. Then they're worried about government action if they do any price controls or whatever happens with Ukraine. It gets a little crazy. So that's going to be difficult, but I'm really, really liking them. I want to start looking or at least being aware of some good oil plays in the option chain. So CHK, this one really stuck out today. It was doing very good while a lot of the oils were kind of struggling, and I just looked at the chain. Seems like this one may be one that isn't as crowded. So again, it seems like a lot of people like XOM and Chevron, so keep your eye out for them. I'm definitely going to be watching them, so we will see what happens, but those are the main plays. As far as everything else, I did make a couple of other plays. We did do a flip 100% on a weekly pre-earnings run up with Airbnb. We took some of the other profits, that space from yesterday, that went up 1,000%, but I sold that at 200%. I know, but shout out Mr. Hits on the news. That was a cool one to play out. But then I also took the crazy butterfly trade. So we talked about this on stream. If you didn't watch yesterday's watch list, you also have a breakdown. So again, watch that, and this will also make more sense. We'll kind of continue it here, but I did make the trade. But what I did instead, I went a little bit closer to the money. And I want you to understand this now. You're probably going to watch me make one or two more of these, especially as we get closer to the Fed meeting. So I wanted to throw one out there, and pretty much I said, let me remix the one from yesterday a little bit, and let's see how it performs. So what I did, I spent $500. I did a play with 10 contracts, but every contract or every play cost about 54 cents. So let's say we wanted to do just one. If you only did one and spent $50 on the play, the max profit is $2,000. The max loss is $54. If you structure it just like this, you cannot lose more than what you pay. And what we mean by that is essentially the strike prices have to be equal distance from each other. Now, none of this is a recommendation. Options trading is risky. Financial advisor is no purpose only thing for today. But in all seriousness, we talked about this a lot. We've been breaking it down. This is a low probability option trade, and if you do not know how to sell options more or less and understand that, it could be very difficult, and you can wind up with a big situation or problem on your hands. A lot of people will mention the liquidity, harder to close, this and that. So again, it's either you kind of know about these or you don't. There's a lot of tutorials. We even have some, or just come on stream and keep asking questions. I'm always down to answer them, and you will always see a lot of comments at the same time. Everybody has their opinion on it, and that's why I'm saying you could listen, learn from it, and then do what you feel comfortable with. But the real reason, like we talked about yesterday, the idea is this is one of the only option strategies that allows us to make money on the stock market going down over a longer period of time rather than doing it quickly. So essentially, this play and how we make money, I bought 10 of these contracts. It's cost me about $540, but the max profit is $20,000. Do I get max profit if the stock drops to 380 tomorrow or 360 in a week? No, it has to be at 360, give or take a couple of dollars by April, and that is the only way to get 20,000. Otherwise, you'll make a little bit less, or if it's not anywhere close, you will lose the entire investment. So that's the quick rundown as far as the play and how it works. This is the butterfly, and you can see here visually, this is why they call it a butterfly. That's the body, and these are the wings. So the top one is the upper wing, this is the middle, and this is the lower wing. So what you end up doing, you buy one of the top wings, you sell two of the body or double whatever you bought, and then then you buy back the same amount that you bought on the same wing. So as long as you keep everything equal distance between the wings and then equal quantity at the wings, you are good to go. You will have a trade where it is defined by what you spend, meaning you can't lose more. If you play with this or end up doing it a little differently, that is where you will wind up with some issues. So to make it simple and understand how we're making money, we essentially bought these 380 puts for April and then we shorted the 360 puts. So essentially we want this play to expire worthless and we want this play to be in the money. And why do you buy this play? It's for insurance, to make sure that if it goes lower than 360, you will not lose more than you spent, and to reduce how much money you will need up front to do a option sell strategy. So how do we make money and what is happening? It's pretty much just the 380 put that you get financed by the 360 by doing this strategy, but the max gain occurs if you end at the middle wing 360 by expiration. So if the stock goes down to 375, 370, this play will be in the money, and depending on how much time is left on this contract, this should probably decay or it won't be worth as much as it is today, and you should be able to make money on this play while making money on this play and then losing about half the value on the insurance play. So hopefully that makes some sense here. We're going to talk about this a lot. Again, best thing you could do is come on live and ask live, and we could always go over this. But I did go with the play, $500 into 20,000. We will see what happens, but with all this volatility, we will even get to see how it moves in the process. So keep your eye out for that one. As far as everything else, like I said, we flipped to Airbnb 100% space. We had all of those, and I think that was pretty much it. Still holding a couple of other plays. I will be watching Roblox is one of them, but Walmart, that earnings play is surprisingly still up. So remember, they report on Thursday. Let's see how they play, especially after the minutes tomorrow. But this is definitely one I want to keep my eye on, especially with the premiums holding, even though the stock hasn't really been doing the best. So watch out for them. Watch out for Disney. Our continuation plays are totally clapped. They expire here this week on the 18th. So see if they come to life. They kind of did today, but they could kind of hold up. I think it could be good. I just think the weeklies are a little bit clapped. So more time would have been helpful. I may want to double dip, but watch out for those. And then Chesapeake, like we said, Facebook, I did also make a call. Remember, remember we had the calls yesterday. Well, after the volatility today, they pretty much held at break even or slightly up. And remember what I was saying yesterday, I want the puts. It's been oversold, but those puts were expensive. So today, puts dropped 50%. I grabbed a next week $200 put for $1, $100. So we'll see how it plays out. Pretty much got $100 both ways. March calls, short-term puts, especially with the minutes here. So we will see what happens, but I definitely like them. Watch out for them. Upstart could really be a good post-earnings. Again, we're going to need the juice tomorrow, but the thing is, they move a lot in some of those contracts. They are expensive, but that could lead to some crazy opportunities in the morning. So watch out for them. Roblox, Qualcomm, and NVIDIA. Qualcomm came back to life, but NVIDIA, they did very good. Again, they got their earnings coming up this week, so watch out for them. And then we had Altria just up here, but they had news, positive news about them and their Altria purchase, or excuse me, a Juul purchase, and not like having some level of like antitrust, or they didn't break any laws. So people like that, watch how it plays out. Again, this one doesn't really move post-market, but tomorrow, especially if we see some of these names kind of do their thing and hold up, that'll be good. And even Abnb, again, they are hitting another 52-week high. Volume is through the roof. Just keep your eye on them. They're going to be interesting. We even have Win as well. We had those old plays. They had some good earnings. Did they come back down? Watch them tomorrow to see if they come to play around a little bit too, but that's definitely one I'm going to watch. And then Boeing, the news today, they had that little drop on it, but watch out. I think they're in a pretty interesting scenario here. They were showing a little weakness. They're still at a level where they could go up a lot, but maybe we get some crazy news on it. I'm not too sure, but watch out for them. And then finally, TLT and the dollar. Very simple. TLT is at the key level. Watch where it goes leading into the minutes. It may be an early snitch, but after the minutes, if TLT goes further, even if the market doesn't react, I will very well take that as some level of signal, and maybe we might get another butterfly. So we'll see what happens, and I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet on. I need you to remember, writing's on the wall. It's up to you to know what that means. But the code loves you. I love you. I'm gonna see you in the morning. Let's go.